Before we get started, we just want to thank Old Republic Surety for sponsoring this episode of Let's Get Surety, as well as NASBP virtual seminars. For more information on Old Republic Surety, visit www.orsurety.com. Now on to our show.
You're listening to Let's Get Surety. Let me hear your bonding talk with Kat Shamapande.
Hey everyone, it's Kat Shamapande. Thanks so much for joining me for this episode of Let's Get Surety. I've got with me today my co-host, Mark McCallum, CEO of NASBP. Hey Mark, thanks for being on.
Hi Kat, always great to be with you.
It's always good to have you on. We've got an interesting topic today that we're going to be discussing. The surety market's place in the U.S. has been really strong over the past couple of years. I know we've all seen that. And it's encouraged new entrants into the surety marketplace. Today's episode, we're going to be talking to one of those new entrants into the marketplace with roots in South America. So to do that, we have with us Andrés Álamos, CEO of Avla US. Hey, Andrés, thanks for being on.
Thank you very much, Kat.
And we also have Sharyl Markovits, head contract surety at Avla US as well. Hey, Sharyl, thanks for being on.
Hi, Kat. Thank you.
Well, before we dive in, I just wanted to know if we could learn a little bit about each of you and how you got into surety. Andrés, can we start with you? Can you tell us a little bit about yourself, your background, and how you found a career in surety?
Yes, really, I started my career in finance. I worked in investment banking in Chile. And then I was invited to start an insurance company in Chile, basically a surety company back in Chile. And with that, I started in this industry for almost, I believe, 10 years. I've been working in surety through Latin America. And right now I'm here in Houston, Texas. It's been a long journey, basically in Chile, in Peru, and right now here in the States.
That's great. Sharyl, how about you? Tell us a little bit about your background and how you found your career in surety.
Well, it's not quite that glamorous as Andrés. That actually started at the ground level. I do consider it fortunate that I found a receptionist job at a bond-only agency many years ago and started learning surety. They taught me contract, commercial, and that really elevated my interest in something I never heard of before, like most people. And so I just kept pursuing the surety industry and worked for two bond-only agencies at the start of my career. Both were pretty long-term, 10 years each, I think, and then found my way to a surety company, which a lot of agents called, oh, you went to the dark side. So I was with a surety company for about 10 years before I came to Avla as head of contract.
That's great. Well, to start, can you just tell us a little bit about how Avla came about?
Yeah, basically, we started the company in Chile. We see an opportunity on the SME or small medium contractor segment that was not well served by the banks and also by the other surety in that market. And with that, we put a little bit of technology in order to basically reach them and also try to give them a solution as fast as possible. So with that, this market opened for us and we started doing business in that segment. And then we expand basically to every kind of companies and we serve them with bonds and other type of insurance. This is replicated by us in different countries. We started with Chile, then we moved to Peru and also to Brazil and Mexico. And basically, if you analyze the segment, it's very similar. And that's why we moved also to Texas last year with the idea to serve this segment of the economy in which we see very high similarities of what we have seen in LATAM. So that's why we started that company. We serve these clients and we give them basically what others can give them because we use technology, and also we understand how to underwrite them. So that's why we choose that segment, and for us, it's been very successful.
That's very interesting. You talked about the small contractor segment, but yet you've been in a lot of different countries and jurisdictions. But you find the contractor segment to be very similar in all those countries. But what about their construction climate and legal climate in those countries as well?
It's very similar. The bond industry, basically, it's similar to what we have here in the States. You need in every contract a performance bond and also payment bonds. But the main difference is that in South America, you basically take the 10% of the value of the contract and you bonded that part of the contract. Here in the States, it's 100% of the value of the contract. So that's the main difference. And also, the idea of the bond in South America, it's basically claim the bond if the contractor fails, because they wanted to change the contractor and start again the entire process. Here in the States, also they want to finish the project. So that's why they basically look for finish that process and not start over with a different Biden process and basically start all over again. So those are the main difference. And regarding contractors, it's very similar because you see that they don't have capacity, they don't have a speed in order to get that bond, and basically they don't know how to deal with misinformation. Basically, because those type of client, they don't have, audited financials, or they have different type of information that for a huge company or a huge bond company, it's different. It's difficult to evaluate. So that's why we try to put those main issues and serve them in a proper way. That's the idea.
Right. Why Texas? When you came into the U.S., why in particular Texas was where you wanted to start?
Basically, because, Texas is a huge market. Right. You have a lot of investment in this state, but also you have similarities in terms of the Hispanics and the Latins and minorities in terms of the SMEs. So you can find companies that are very similar of what we have in Brazil or in Mexico. With that, it's very easy for us to replicate our underwriting model and also our experience in South America here in the States. So we see a huge market, a lot of movement, a lot of contraction, and also clients that are very similar of what we have in Latin America.
Right.
So in the expansion across Latin America, did you encounter similar pain points or myths around surety?
Yes, basically are very similar. Okay, so companies are dealing with the same problems in terms of getting capacity and getting approvals. Also, we see that the industry is suffering or suffered in the last 3 years of high cost, difficulties in terms of labors, and basically the difficulty in order to finish those projects. So it's the same thing here that we have in South America, and I believe it's part of the opportunity that we see here in the States, because we experienced that in South America, and right now we are trying that experience here to the US and serve similar type of clients. We are used to claims or loss ratios much higher of what we have here in the States. For example, in Peru, I lived there for 7 years, leading that Avla in Peru, and we have loss ratio of around 60%. So it's a totally different way of how you deal with contractors, with projects, and basically you have to understand very well the client and also very well the obligee in order to give them the capacity and also the specific bond that they are requiring.
Well, you mentioned that it's typical in Latin America that the bond amount may be, for example, 10% of the contract amount. But here in the U.S., often it's 100% for both the performance and payment bonds. Sharyl, how do you see that in terms of your education of the company for a Texas marketplace and kind of the construction culture in Texas?
Right, you're correct. And in Texas, the United States, the bond mirrors the contract. And if that contract's in 1,500,000, then the bond is going to be that. And even if an obligee requires the bond to be 25% of the contract amount, we're still liable for the full amount. And so we bill premium on the full amount, even though they want a bond that's a percentage of that. So that really doesn't make sense. I'm not sure why some do that. It's rare, but it's happened. As far as the culture, I've only underwritten bonds in Texas or for the United States. I've underwritten bonds in projects all over the United States. But so I'm not really familiar with how it works in the countries where they've started. They're kind of teaching me that. But as far as on this side, I think we have talked about the different aspects of, okay, it's like that there, but over here we've got to consider things like that, the bond amount and how it's got to be the same as the contract amount and things like that. So it's a learning curve on both ends, I think.
Right.
For me, it's very important how you see the bond. Here in the States, you use the bond in order to align the contractor with the project. And basically, the idea of finalize that project in a proper way. Back in South America, you see the bond as basically a penalty, okay? So you have this 10% amount of the project, and that's a penalty for the contractor in order to fail the project so that the obligee can use that 10% in order to do again a bidding process. So it's a totally different approach. And you can also see that in South America, it's an on-demand market. So basically, the obligee claim the bond and you have to pay in 3 days. So you don't have like many ways in order to avoid that claim or try to fix the problem. And why? Because they want to, hey, this guy failed, so goodbye, and I want to change it and bring another one. That's a very costly way of doing business because at the end you have to start everything. And basically, if you see the infrastructure in South America, it's not going anywhere because you have all these processes that delay every project. So that's why I told you that it's a different view on how we have to deal with projects and development of the infrastructure of the countries.
Yeah, I mean, that on-demand type instrument is very different than the U.S. version of the bond, typically. And I would imagine that weighs in your underwriting process as well and how you see what your risk is and so forth here. I also would imagine that an on-demand instrument is very difficult for smaller contractors and how that may impact them in South America.
It's very difficult for them, but also you have more alternatives in order to give them that capacity. For example, you can go from an indemnity agreement, GIA, to cash collateral at 100%. So you have many options. You can ask them a percentage of the bond in cash. You can ask them a real estate, basically under the name of the company. You can ask them a trust in order to put money and also manage all the flows of the contract that is similar of what we have here, but it's very common. And for them, also, it's very common to basically give that to the companies or to the surety bonds company in order to get that bond and sign the project. So it's a totally different approach in order to, hey, I need the bond in order to sign for a project. If I don't have the bond, I can't do anything. So they are more open to basically give everything that they have in order to get that bond. And sorry, but it comes also because previous to the surety bond companies, the banks were the institution which issue the bonds. So basically, it's like a financial guarantee view on the bond in South America.
So the letters of credit from the bank
Yes.
in lieu of a bond or instead of a bond previously? Is that what you're saying?
Yes.
Yes.
And the regulation also was done based on that product from the banks. So what we did also is try to add to the different instruments that were able to guarantee a project to add a bond in that requirements from an insurance company.
Well, with the growth across Latin America and now expansion into Texas and the U.S., I'm sure there have been some bumps along the road and lessons learned as you've gone through that growth process. Can you share any insights into what that's been like? Andrés and Sharyl, you're joining the team in Texas. If you've got any insights as to what that's been like, that'd be great as well.
Really, it's been a roller coaster. Okay. Yeah, but at the end, as I mentioned at the beginning, the segment and the industry is very similar. Mm-hmm. So regulations in South America are very similar also. So it was not that difficult to get the license in every of the countries. As you expand to other countries, you already have the experience of the previous one. So you basically have less errors in order to do in a new geography. But at the end, the most difficult thing is to start and try to understand what the market needs and how you can offer them the solution in specific. So that's the issue. And I believe in Texas, maybe Sharyl can explain better, but we get that problem, we generate this solution, and we are doing that in order to expand our company here in Texas. That it's the Avla Accelerated, that is our program in order to offer a very good solution to our potential clients and also our agencies.
And so is that a credit-based model or product? And is that something you have that you developed in Latin America or South America and then brought to Texas, or is that something specifically tailored to the Texas marketplace?
We use the same idea in every country. We call it down there Minuta Express. That is like an express program. And yes, we brought that here to Texas, and maybe Sharyl can explain better that. But that's the idea. We see these similarities between our target or our market segment, and based on that, we generate this express program in order to serve them very well and very fast.
And Sharyl, did you want to add about that product in the Texas market?
The surety industry is so competitive, and here we're trying to gain traction starting in Texas and bringing agents on board. You have to have something that appeals to them. Many agencies, they have several mouths to feed, and do they really want to take on somebody else that they got to feed? So our accelerated program is one of our niches that we really, I think, helps us make that traction into the surety industry. It is a credit-based program. We do underwriting based on the owner's and spouse's credit up to $1.5 million. So we're going to consider a bond, single or aggregate, up to $1.5 million, primarily based on their credit. So that's our underwriting. And We do look at job history. What size of jobs have they done in the past? We're not going to say, oh, this guy's has done 200,000 typical job size, and boom, give him $1.5 million. There's other things that factor into it, but I think we have a very quality product, and we're the surety industry is a risk-taking business. Even accounts with full underwriting is a risk. And nowadays, $1 million to $1.5 million job isn't what it was way back then. It's the
Right.
the size of the job now at $1.5 million isn't what it was back then. So I think we have a lot to offer our agents, and doing that, what they love to say, ease of doing business. We help them with that in our program. So
I see. Do you also offer a traditional program as well?
we do. We do have standard. We can offer accounts standard surety. It does require full underwriting, which is very paper intensive. But yes, we can offer standard surety accounts.
And I know you said that we've talked a lot about contract, but you look at contract and commercial. Is that correct?
Correct. We do have a commercial department. There is a portal where an agent can go in and issue most bonds that are issued freely into the portal. If not, it goes to underwriting. But yes, we do that. License and permit, your kind of just standard small commercial bonds.
And is there a need for commercial bonds that you've also filled in South America, Andrés?
Basically, you don't have that differentiation. You use the same bond for everything. Basically, for commercial, you use the performance bond over there that it calls el cumplimiento. But yeah, you have different coverage for different needs. Also, you have, similarly to commercial bonds, you have administrative bonds in terms of give them to customs. For example, custom bonds, you need a performance bond based on that. So yeah, it's very similar. You have both sides of the product.
That's terrific. Well, but it's been really interesting learning a little bit more about your company and your growth. Can you share any final thoughts you have about what it's like to grow and to go through a process like this where you're breaking into new markets?
Really, it's incredible. We didn't expect that you can find similarities between markets that are totally different at the end, and they are far from here. That's one thing. The other thing is that you can always expand if you look for solution for a pain point. Also, a very well and experimented team in the ground, and also try to bring some technology and experience from abroad in order to generate some solutions or a service basically that you can do a little bit better. So we are very happy here in the States. It's been slower than we expected, really, because there's some issues. You probably know that for a surety, in order to operate here, you need treasury list, the T list. So for us, we can't have T list because we don't have premium. So it's like a chicken and egg situation, and we had to deal with that. But at the end, there's many things that we are going to face, and the idea is to try to generate solutions and try to serve the market and try to offer our service or our product to the market.
Right. I was curious, do you also envision your assistance of clients, whether they be in Brazil or Peru or Chile, if they want to perform business in the U.S., and vice versa? Do you see clients in the U.S. who wish to enter into a market in Brazil or Chile, serving their interests as well?
Yes, of course. That's one of our key, basically, offerings that we have here. During the last 6 months, we had like 20 opportunities between the U.S. and South America, basically in Mexico, in Brazil, and in Chile. So we are working with some huge agencies that have this type of clients and they are operating in the region. So we are helping with that. It's not easy because you have to teach them how it works and
Right.
how we deal with the underwriting over there. But at the end, it's the same idea and the same language. And with that, we are trying to focus on help clients to come from the US to South America, and also the clients that we have in South America coming to the US. There's a lot of, for example, Spanish contractors, huge companies that we serve in South America that operates here in the States. So also that's an opportunity that we have when we grow, because right now we have only a license in Texas. The idea is to expand to nationwide in the coming years, but we have that connection, we have that relationship, and the idea is to keep serving them here.
Where you kind of already answered maybe my next question, which was in 5 years, in terms of your U.S. program, where do you see that? Where would you like to be?
We like to be nationwide with our tier list, and also try to offering or adding other lines of business, such as property and casualty, that is very linked with surety. And we do that also in South America. We have P&C lines in Peru, in Brazil, and right now we are starting an insurance company for P&C in Mexico, because over there you need 2 different licenses. So yeah, the idea is to bring everything here and give them the one-stop shop idea for a client or for an agency in order to come to Avla and get all the products that they need.
That's great. Well, I just want to thank you both for being on and sharing with us the journey that you've been on with Avla.
You've been listening to Let's Get Surety, brought to you by the National Association of Surety Bond Producers. For more information about the NASBP and its members, visit nasbp.org.
Before we go, we just want to say thank you again to Old Republic Surety for their generous support in sponsoring this episode of Let's Get Surety. For more information on Old Republic Surety, visit www.orsurety.com.